Industries at an enterprise value of 5,000 odd crores. Your first reaction, what would this acquisition mean for an Ambuja?
So I think it's an excellent acquisition at a very, very attractive valuation. I think the fair value would have been more like 6,000 crore plus.
Wow.
But given that Sanghi was a distressed seller, Ambuja has got an excellent deal. It gives them a platform to really expand their capacity quite quickly. Meaning they have already guided for doubling the capacity by FY28, and this has come like a shot in the arm because the infrastructure is already ready. The clinker capacity is much higher than cement capacity, and they can just add grinding units. So within a year, I think they can go to 9 million ton. So overall, it's a very, very positive deal.
Interesting here, and you point out that they can increase capacity very quickly. Rakesh, just in the context of the larger plans to double capacity in 5 years, they could achieve that faster than anticipated, right?
Meaning it takes time to build greenfield and brownfield capacities, but acquiring is the easiest way. And when the acquisition price is almost closer to what you would normally spend on a greenfield or brownfield expansion, it becomes no-brainer. Secondly, the huge amount of limestone that Sanghi Industries has would also help solve some of the problems which Ambuja was facing at the plant in Ambuja Nagar. So it's a win-win situation for both the companies.
Right. Overall, Rakesh, if you have to look at, the synergies from an expansion perspective, what would the key ones be according to you with this acquisition?
So as the first I was mentioning was that, there's limestone issues at Ambuja Nagar, which is a big site for, Ambuja in Gujarat. Number two, they have, a string of jetties and ports. One is in Mumbai, then in southern parts of India, and this clinker can actually be utilized to bring cement to Mumbai, etc. So they have a ready infrastructure, and with Adani themselves having such a large port facilities, they can quickly capture the whole 6,000 kilometer of coastline that India has, and most of the larger cities are near the coast. So there's a ready market for this kind of capacity. So I think nobody could have utilized this facility better than Adani and Ambuja.
Rakesh, a quick question on the captive port that Sanghi has as well. And I was wondering whether it can be utilized. From what I read, they do have a few markets abroad that they also export to. But I believe that in the larger scheme of things, it's not a very large percentage. But does that open the doors for a higher contribution to exports, or is that not something that will be of strategic nature for the company?
Export of cement is not really that lucrative. More so, the Middle East, which is our natural market, is already surplus in cement, and their cost of production is low given the energy prices. So I don't think export is a big thing for this acquisition. But as I was mentioning, capturing the whole of 6,000 kilometers of coastline of India using Ambuja Nagar and Sanghi now, I think that is what should be the key focus for Adani's.
Right. Rakesh, from a capacity perspective, as we know, Ultratech still is on the top, right? How close does this actually narrow the gap between the first and the second from a capacity perspective?
That gap will be very difficult to narrow because Ultratech is also aggressively growing. So I think both the companies will continue to grow at a similar pace. And there are not too many large acquisitions left to be done in India. So I don't think that gap will narrow. I think Adani will have to contend with that second position, but that's a very strong second position that I'll say.
Okay, so from that perspective, then let me ask you, of course, with this acquisition and the plan to move towards 140, the whole conversation about pricing ability and demand for cement, I think there were a few very positive trends that were being spoken to or spoken about over the last couple of weeks or 3 weeks as well. So how do you rate how do you rate the sector, and how do you rate Ambuja based on what we've just heard in terms of the acquisition?
So first of all, there is a decent demand, as we've seen. All the companies have been able to report double-digit volume growth numbers, and that is driven by infrastructure and rebound in housing sector. I think this should continue at least till elections. It's only post-election there could be a little bit of lull because ordering etc. can slow down. Now, having said that, Ultratech, the leader, is cognizant of the fact that Adani is coming up very strongly, and that's why they are trying to capture market share and they are pushing more volume into the system. The fallout is that prices haven't really gone up as much as people would have liked it to, but that's the reality. Fortunately for Adani, Ambuja and ACC are such strong brands. They are not getting impacted too much. It's the B grade and the C grade brands which are really getting impacted. They have to sell at a deeper discount to really clear them volumes. So for Ambuja, ACC and Ultratech, they are having best of the both worlds. They are able to push to volume, they are able to capture market share, and they get premium pricing. So I think that's the scenario for the industry right now. And from the investor point of view, it makes sense to stick to these leaders because these are the ones who would grow the faster and will have the best profitability.
Right. Rakesh, one quick question that Alex and I were just discussing right now is what happens to the residual stake of the promoters in Sanghi?
So, that's an interesting question because the price being paid is not that lucrative. So while there would be an open offer, but I doubt retail investors are under that same kind of duress as Sanghi promoters were. So I don't think there will be too much which Adanis will be able to garner in the open, offer. But I think the overall game plan for Adani would be to merge ACC and Sanghi Industries into Ambuja at some point in time. So I think that would be the natural course of progression. Timing-wise, we are not sure, but that should happen over the next year or 2 years.
I was just wondering, Rakesh, if you looked at this, I believe that Sanghi is quite leveraged, and there's quite a substantial amount of debt on the books as well. Do you think that there will be need to infuse cash to take care of that, or will that not be a concern as it, as it's part of the overall group?
Yeah, so Alex, 5,000 crore takes care of debt and equity both.
Okay.
So the debt will be repaid. Nothing will be left on Sanghi's book after this deal.
Understood.
Rakesh, one more question that comes to me from a capacity perspective is that Ambuja had set a goal of 140 MTPA by 2028. With this acquisition, they're saying that the time to achieve this goal is going to be much ahead. By when do you think will this acquisition help them achieve their goal of 140 MTPA?
So Adanis are aggressively, announcing projects, and they have ordered for machinery. So this 15 million ton comes in additional, which comes as a buffer. So they were in any case looking to go to 140, which looked a little bit of stretch target. But this, 6.7 million clinker coming in, and they are saying that doubling of this to 14, 15 million ton in the near term. I think this 140 million ton target now is easily achievable. Earlier, I would have thought there were a little bit ifs and buts, but now it's easily achievable.
Rakesh, thank you so much for joining in and for getting us that perspective. I'm sure a lot of our viewers are very thankful for that very quick perspective that you've given us on this deal. Now, viewers, it's interesting. Let's, in fact, take stock of what is happening in terms of the share price movement. Hira's got it on her screen. Hira, what are you looking at?
So overall, if you see right now, it's a pretty flattish move that we are seeing in terms of Ambuja, 0.2% higher, 462. So we are still some percentage points away from a 52-week high. It had actually hit at levels of around 598.
And interestingly, Sanghi as well, it hit an upper circuit in trade yesterday, but today Sanghi Industries is only up about 1% or so, around that 101, 101.5 mark. So it might be, as Rakesh was pointing out, the shareholders, the public shareholders of Sanghi Industries may not be under that duress that the promoter was. and certain other details, Hiral, coming out earlier today with regard to the indebtedness of the promoter as well. And we have also read that a large portion of his shareholding was in fact pledged. Nearly 99% of it was in fact pledged as things stood, as of right now.
Absolutely. And if you see Ambuja Cements' 1-year performance as well, 21 to 20% is the kind of up move that we've seen on the counter. But it's been interesting to see how volatile a ride it has been for all the cement players. In fact, this is the season from here to 2024 when cement companies will be in focus as well ahead of the elections, because that's usually the trend that we've seen, wherein cement makers usually see a lot of orders that start coming in, sales start improving, prices start improving as well ahead of the election. So this phase from here to 2024 elections is going to be absolutely crucial for cement players. And let's see how the other cement players also stack up to this, because clearly we still know that Ultratech is the leader. The gap, as Rakesh was mentioning, for Adani to fill between the first and the second is a huge one to fill, but still to be the second biggest player in the cement space is going to be a big deal as well. And the kind of capacity expansion that we're talking about is absolutely huge. The key is the valuation. The expectation was a 6,000 crore enterprise value, Alex. They've got it at 5,000 odd crores. So the valuation is also pretty good. And this is mainly on the back of the distressed sale that Sanghi had to make on the back of the leverage that they hold.
No, certainly. And you were pointing out about the pricing and the volumes that cement companies can get. But it also is important from that perspective, then what you can squeeze on the cost side. And as they pointed out, the focus is going to be on building the lowest cost production of cement or producer of cement in the country. So that's going to be something critical to watch. We are going to try and get more voices for you over the course of the day. But at least at this juncture, you have a sense from our conversation with Rakesh a short while back about the fact that this acquisition is being done for the Ambuja for Ambuja at a very attractive valuation. Hiral was pointing out that just now 6,000 crore would have been the fair value, and they've gotten it at an enterprise value of 5,000 crore.
Right. And if you see from the markets that Sanghi caters to as well, Alex, it's mainly the western markets of Gujarat, Rajasthan, Maharashtra, as well as Madhya Pradesh, right? So these are regions which will give Ambuja Cement also a further push, in terms of hold as well. So that's going to be interesting to watch out for from here on. But apart from that, this is one of the largest ever, in terms of the M&A transactions in the infrastructure and material space after Wholesome Group's stake that was acquired in Ambuja Cement and ACC for almost $6.5 billion in cash that was done in September last year, right? Now, through the subsidiaries, as we know, Wholesome actually held 63.19% in Ambuja, whereas 54.53% in ACC, of which 50% is held through an Ambuja Cement. So overall, the way the cement space is actually coming together now for these companies is interesting to watch out for. And the most important is how Adani Group will be able to double its capacity, the goal that they have given for 2028, which will be arrived at much earlier. So that's going to be interesting. And they've already said that they want to become the largest cement manufacturer as well. So how many further acquisitions, that could be on the cards is something that we need to wait and watch.
Is the way to go, perhaps.
Absolutely, because, for an organic growth to happen in, companies like from the cement space or anywhere where the capex is huge, the time period is huge, it takes a really long gestation period,
and you
right?
need to have, so what was interesting, I thought, in our conversation a short while back here, is the importance of that limestone mine. So it's not just the cement manufacturing capacity and the grinding units that you build, or rather the clinker and the grinding units that you build. You need to have access to water, which Sanghi has in the form of the Kutch, or the sea just off the coast of Kutch. You have the port that is available, and that's a captive port, and you also have power. These are very critical resources. You also have a belt that takes the limestone straight from the mine all the way to to the plant. So all of these factors put together make it a very strategic and very interesting acquisition. And all of these factors play into building new capacity as well. You need to have access to a limestone mine with significant capacity or with significant resources. You need to have power resources. You need to have water. All of these factors with regard to cement production.
Yes, and from an Ultratech, followed by Adani, followed by Shree Cement. Then you have Dalmia, and India Cement. That's the pecking order in terms of capacity. But let's head across to Uttam Kumar Shrimal, who's a senior research analyst at Axis Securities. Uttam, good morning and welcome to the show. Your first, view in terms of the acquisition of Sanghi Industries that has been made by Ambuja for 5,000 crore enterprise value. Uttam, are you able to hear me?
Yeah, I'm able to hear
Yes, your first reaction to this acquisition and the enterprise value.
I think it's a good value. Company has got Sanghi Cement at 5,000 crore rupees. So that's with 6 million ton of grinding and 6.6 million ton of clinker. So that's I think a reasonable one because Adani Ambuja has a blending ratio of 1.6 to 1.7. So they can produce cement of around 10 to 11 million ton. So I think it's a good deal because they will get the very good assets with a very good limestone mines and all that. So I believe it's a good deal on the part of the Ambuja.
Okay, in terms of geographical focus, I believe that Sanghi is primarily focused on the western region, but there's also a pocket that they cater to in the south as well. But if you add that to what Ambuja and ACC cover, what is the kind of geographical addressable market that this group of companies will now have?
Because see, Ambuja is already present in the Gujarat.
Yes.
So they will have further presence through Sanghi Cement in that Kutch area and others. Because I believe Sanghi has also got some land in Surat, so they can also develop that. So I think with this acquisition, Ambuja will be able to consolidate its position in the Gujarat particularly and adjacency areas like in Mumbai or and other related areas thereon. So it will help them to consolidate their position going ahead also.
Right. Overall, Uttam, help us understand from a capacity perspective. Yes, the gap between the first and the second is still huge. Overall, earlier, Ambuja had said that they would be looking to double capacity by 2028. How are you looking at it after this acquisition? How long do you think it will take them?
See, yesterday company in its phone call reiterated that they will grow their capacity to 140 million ton by FY28. And with this acquisition, I think this expansion will be more expedited because they will be getting 6.1 million ton of grinding unit along with 6.6 million ton of clinker unit. So they can produce more cement and their capacity expansion of up to 140 million ton will get expedited with this acquisition.
Interesting point here, Uttam, because according to the release that was sent out on the notification, Ambuja plans to increase the cement capacity at Sanghipuram to 15 million metric tons over the next couple of years itself. So are we talking about the potential to reach that target of 140 million metric tons faster than was previously anticipated? Because if we're talking about it currently with this acquisition, it goes up to very close to 75 million metric tons. And you add another 7-8 to that, where moving closer to above 80. So the gap is getting closed very quickly.
Yeah, definitely. Because see, I think this is the right acquisition at 5,000 crore enterprise value, and this will help Ambuja to expedite its expansion program and to catch up with the larger players like Ultratech. So this will help a company in a big way to expedite its expansion program. And moving ahead with Sanghi, so 6.6 million ton of clinker capacity and further expansion, they can further accelerate their expansion plan.
Right. Uttam, just stay with us. We have a tweet that has come in from Gautam Adani, which I would want to quickly take it up as well, which you will see on your screens as we speak. I think I'm just waiting to see the tweet. Alex, do you see it on the screens right now?
Yeah, so I believe it is, and he's saying that he's promising to double cement capacity by 2028, which is on track. And he's also announcing that he's delighted to announce the acquisition of Sanghi Cement, which he points out is the most efficient and lowest cost clinker manufacturer, and he's adding that to the Adani portfolio. As part of Ambuja Cements, he says that Sanghi Cement in the Karmabhumi, which is Kutch, significantly leverages the coastal shipping and the energy and logistics advantages. Sangipuram cement capacity will be doubled to 15 million metric tons. So more or less a reiteration of what has been communicated, of course, to the exchanges first. But this is important because I think Mr. Adani is also pointing to the strategic nature of the acquisition in terms of the port that is available. Uttam, you're still with us. Uttam, I'm just trying to understand how significant is this port, and also the limestone reserves, which I think has been pointed out as a very important part of this acquisition.
Yeah, definitely. See, Sanghi has got limestone reserve over 1 billion ton. So that's a very good thing. And as we all know, Adani has very good logistic efficiencies. And with the acquisition of Sanghi, so Sanghi was not able to explore the cement market because of its location in the Kutch. But with Adani coming in, so they have the necessity expertise in logistic and other things. So they can utilize the assets very well moving ahead. So that's why I'm saying this is a very good deal on the part of the Ambuja, and they will be able to explore the entire capacity which existing promoter has not been able to explore. So that will help them moving ahead. And with the Adani coming in and getting the asset at 5,000 crore enterprise value, I think it's a very good on the part of the company.
Right. So that's going to be an interesting move to watch out for. Thank you, Uttam, for sharing the details with us and your views overall. But moving on, lots to talk about on this one. Naveen Sahadev, analyst at ICICI Securities, also joins in to get us more perspective. Naveen, we've been
Okay, so
we'll wait for it. But I was just reading another report right now coming in terms of Jefferies, Alex, which has gone ahead and raised Ambuja ACC price target upwards, and this is mainly on the back of a strong EBITDA growth. So that's a report coming in from a Jefferies on this one. In fact, what they've said is that the EBITDA levels in the reported FY24 Q1 earnings have been something which have led to this kind of an upgrade. And this was mainly on the back of a strong volume potential and efficiency improvement with regards to where the delivery commencement goes. They've upgraded the target multiple for Ambuja to 15 times from the previous 14 times. And they've also revised Ambuja's target price upwards to 540 rupees and ACC's target price to 2,325 rupees. So that's a Jefferies report coming in there. Apart from that, if you see in terms of the capex, they've continued to say that ACC's Amita project is expected to start production in the second quarter of FY24. And regarding the general use cement expansion, Ambuja plans to add 3 units closer to its Bhatapura and Chandrapur line. It is also looking at a 1 million ton per annum capacity expansion at its Bhatinda plant. And Jeffrey says that all these projects will increase Ambuja's capacity from 67.5 million ton per annum in FY23 to 83 million tons per annum in FY26. So you already have a Jeffries which is talking about of a strong EBITDA growth as well as a strong capacity uptick coming in there. In fact, let's quickly go across to Naveen Sahadev from ICICI Securities. Naveen, good morning and welcome to the show. My first question coming to you is, what's your first take specifically from a capacity addition perspective on the back of the acquisition that has been made by Ambuja?
So I think on the face of it, it's a very lucrative deal. It has cement capacity of 6.1, but the clinker is 6.6. Going by Ambuja's blending ratio, they can easily get an output of roughly 10 million tons. And mind you, Sanghi itself was, I think, sometime back considering a 2 million ton grinding unit expansion in Surat. So on day one, to me, the asset is scalable to 8 million ton, or very soon you can scale it up to 8 or 10 million ton. It's a very lucrative deal in my
So from that perspective, then a follow-up, because I think we've covered quite a lot of ground so far since we, at this point, now that we've got you, but we haven't covered this. Would you think that with this acquisition and with the potential, as you point out, to ramp up capacity very quickly, Naveen, that a re-rating will need to take place for Ambuja?
Ideally, it should, because this acquisition, so you just go back that the first acquisition, as in Adani took the entire ACC Ambuja at $170. You are buying at this asset at assuming 8 million tons, because let me put it simply for you. 5,000 crore is the enterprise value. All they need to spend is just 500 crore to get additional 2 million ton, or 1,000 crore to get 4 million ton of grinding capacity. So the implied enterprise value is 5,500 crore for an 8 million ton, which makes the EV per ton $82, $83. Or if you take it 10, then it goes down another, roughly around 70. So against a 170 initial acquisition, if you're acquiring assets at just around $70 to $80, certainly positive, because that much more benefit you can claim, you can expect from ROEs of your overall investment. And certainly it leads to increase in market share, because that is the asset. I think I would like to believe that given the port infrastructure and in general the strength of Ambuja in the western side, they should be able to scale up this asset fairly fast.
Fantastic.
Right. Naveen, one quick question in terms of pricing as well as your view on the cement sector as a whole. Clearly, pan-India prices have marginally declined in the month of July, and that's what the dealer checks have been indicating. The demand in July has been slightly sluggish on the back of the monsoon impact as well. And we've not really heard of any price hikes in the month of August so far. So taking these points consideration, how are you expecting the price trend from here on, and taking elections at the next couple of months that are on the cards from a demand perspective as well, how are you looking at it?
Right. So incidentally, just yesterday, we released a note precisely summarizing these factors that you just point out, that to begin with, your results for the quarter have disappointed. There is a sequential drop in EBITDA per ton. Second is pricing, as you already pointed out, are weak, and obviously because of the monsoon season and in general the underlying competitive intensity, there is not much expectation from price hikes also. So your EBITDA per ton in Q2 tends to be that much more down, and it can slide down further. Second is, of course, FY24 is going to be a great year because of pre-election demand. But I would be worried for next year, because last year time when we saw that in FY19 demand grew 13%, but FY20 was zero or almost flat. I would expect a similar trend. If that happens, then your pricing competitive intensity increases that much more, and then you have these kind of acquisitions which can disturb pricing arrangement more. You also have huge, capacities are shaping up for commissioning in FY25-26, which says that your demand supply equilibrium is going to get worsened further. So overall, I have a cautious view on the sector.
Fantastic. Naveen, thanks so much for joining in and for giving us the perspective that you did. All right, so we've covered a lot of ground on this particular acquisition, but there's more on the cards because the management is expected to speak very soon about the rationale behind the deal. But it's been an absolute pleasure bringing you all of this information. Let us know what you think. From Hero and myself, thank you so much for watching. Do stay tuned. This is BQ Prime.